Hello, welcome in the week 5, stage 2 of the 2026 protocol teaching series. So today's topic is draw on liquidity. As Zeus said, trading without a draw on liquidity is as if you're driving without a destination. So it's very important to have clear draw on liquidity. We have three methods to determine draw on liquidity: time cycles, key levels, PD arrays. Okay, so uh, yeah, I hope you already investigated what Falduti delivered here. If no, go and check this out. I'm going to show you examples of the chart. So first, draw on liquidity is patch and revert model. So patch and revert. Take a look. We are purging previous cycle low and we are reverting to the previous cycle high, which is right there. Previous cycle low, previous cycle high. Purge and revert. So if you're trading purge and revert, you want to target the previous cycle high, because this is purge and revert to the previous cycle high. Purge the previous cycle low, revert to the previous cycle high. And what is great in that example, take a look how we stopped right in advance of the previous cycle high. This is, guys, this shallow retracement is nothing more than engineering of the buy side liquidity. When we are stopping right in advance of the draw on liquidity, it's a trap for sellers in that case to go short, to make them think that now lower prices are next. But this is nothing more than a just retrace. The retracement ended in the 50% of the range of this expansion. So we expanded, we retraced to 50%, and we expanded once more to the previous cycle high. Next draw on liquidity are the time-based liquidity. Of course, this is also time-based because this is cycle high. But now we are going to the high time frames. Previous day low, previous day high. So the easiest model to trade is purge on the previous day high, on the previous day low, and revert to the previous day high. It's very, very often a model that happens in the Nasdaq. What you want to see in this case is SMT with the previous daily low. Take a look. We purge the previous day low and we reverted to the previous day high. Beautiful. If you are bullish, if your institutional order flow is bullish, you want to target the previous day high, but first you want to purge on, let's say, London low or the previous day low. Okay, let's say right now institutional order flow is bearish. So what you want to target? Engineering sell side. This example, PM low. So let's see what happens. Okay, we have new day. We have beautiful open high, low close day right now. Take a look at this fair value gap, very important. We created that fair value gap in a range of this old fair value gap. Now we have the swing point on the Asia, on the London, and the draw liquidity is Asia low, PM low, previous day low, as you can see, because new day opened, so this is now previous day low. And of course we can look for more liquidity on the higher time frames, but right now I think this two draws on liquidity will be enough. So we have clear DOL. Now you want to determine what is your POI. My POI is this fair value gap, and you want to look for shorts that POI. Okay, very easy. And this repeats every day. We have two models. I will show you. Basically, we are trading from the POI to the draw on liquidity. With the institutional order flow. So let's say institutional order flow is bullish. We are expanding. We are retracing to the POI. And you have the next expansion. So expansion is an expansion. And this is your first model. We also have the second model when the POI, when the draw on liquidity is your POI. So let's say we are bullish. Here is the previous week high. And let's say this is previous day low. So price expands towards the previous week high. Sweep this out. New S&P created. Now you can trade the retracement because price expand, retrace and expand. So you can trade the expansion, but you also can trade the retracement. So you also can trade this move. And in that case, let's say here is the key liquidity. You target the PD array because price is expanding, retracing to PD array most usually, and expanding higher. So if you are trading this move, this retracement move, you want to target some PD array, like in this example. Okay, price expanded higher. You have to always know what is your current institutional order flow. For me here, institutional order flow is still bearish. Okay, we patched the previous day high. So now, all eyes on the previous day low. Patch and revert. Okay, previous day low was right there, because new day opened. We swept another previous day high, and we reverted to the previous day low. Now, the previous month low, or the Monday low, or the previous week low can be your target. Okay, price slumps lower. Have to pay close attention if you didn't create a SMT rider. So the draw on liquidity is taken. Take a look at this fair value gap. This fair value gap was created aligned with this Monday low. This is very key algorithmic signature. So if you close below, I want to see price retrace, and this is another short opportunity. Okay, we didn't tap to it, but the drawn liquidity is still correct. Pay close attention to the first fair value gap created in a leg higher. As you can see, I'm always right. I'm maybe not always, but yeah, I was right in that case. This fair value gap was very crucial. As you can see, we have a lot of fair value gaps, plenty of fair value gaps, but not every fair value gap is important for you. My Discord is growing. Some people are coming and instantly saying that ICT I can trade, fair value gaps doesn't work, this doesn't work, there's no algorithm, only pressure selling or inducements, I don't know, patterns, support resistance. Guys, first of all, if you want to be mean to anyone, you get banned instantly, so this is not a place for you, and basically get the fuck out from here. If you think something is not working, okay, we can debate, but there is no room for insults, for conflicts, for arguing. So yeah, this is a quick message for some people. Okay, so we had expansion, retracement, now we are forming the next expansion. New days opens, open high, close low. Take a look, we patched this liquidity. Now we can target some PDRA, some internal liquidity, and slump lower. Remember, guys, what I said 2 minutes ago? The first fair value gap of the leg higher. I annotated that fair value gap. Take a look how we reacted of it. Now we have a little bit of a consolidation, but still this area working very well. And basically now the institutional flow is switched because we closed above the POI. So this is how you look for draws on liquidity. Basically look for previous, if you are bullish, look for perch on previous day low and revert to the previous day high. If you are bearish, look for perch on previous day high and revert to the previous day low. Okay? If you are trading expansion leg, target liquidity, but if you are trading retracement, target PDRA. Pay close attention if you are stopping right in advance of liquidity. This is very important because, as I said in the beginning of this video, this is engineering of the liquidity. Nothing more than that, so don't be scared. Let's see if we have something interesting right now. Yeah, also we have the price cycles. As you can see, asphalt duty, beautiful annotated right there, right? Yeah, patch and revert. Take a look at this patch and revert, previous day low, beautiful. Yeah, I am high, today I am low. Of course, you have to also look at the sessions high, not only previous day low and previous day high. Yeah. Oh, now I have good idea what I want to show you. Take a look how London was delivering for the past 2 days. It was very clean. Here's the Asia edge. We got the perch, we got the 10 minutes time cycle on the high, and what happens next? Revert to the London low, to the Asia low, sorry. So perch on Asia high, revert to the London low. Kurwa mać, sorry for that. So a perch on Asia high and revert to the Asia low. Beautiful. What happened day before? The same exact thing. Perch on the Asia high, revert to the Asia low. Very nice. Low resistance liquidity. Run. Beautiful. Don't be scared if you trade sits in accumulation. Be scared if price sits in a POI and accumulates. But if price expands very fast from your entry, this is good sign. So don't be scared of it. This is just time distortion. You are waiting for the right time to come. So now we can talk about the current situation, because we can agree that every technical analysis is correct if you are doing it on the historical data in the past. But let's predict the future. Okay, don't worry. I have no problem with that. So what I said in the beginning of this video, pay close attention how we stopped right in advance of this November low, and this is what I'm looking for. Okay, so we had the very nice expansion, very nice retracement to 50%. Take a look at this volume imbalance. And now we are producing the next expansion leg. So far it's a little bit messy. What I want to see is price. We are now in the premium. We might inverse that gap as I'm watching this right now. But what I want to see is perch on this high, and then we can slump lower, or we will just reject that CB. So this is what I'm looking for. So I'm looking for the lower prices on the daily to the moment we are not closing above the following balance. This annotated right there. Because of the fact we have clear drawn liquidity, this is my drawn liquidity combined with this low that we created in advance of this low. Going to the 4-hour chart, I'm expecting open high, low, close wick. Pay close attention to the first fair value gap created on the leg lower. So we might open high to this fair value gap, create SMT with these highs, and slam lower. This would be very great. So what my drawn liquidity is? November low. What my POI is? This 4-hour imbalance. Okay. We might not close above it, but just only produce the wick above it, purge this liquidity, and slam lower. I also accepting that. So yeah, I think this is it for today's topic. Yeah. So if you have any questions about the drawn liquidity or how to determine what is the current institutional order flow, check out my previous videos. I have talked about it already. So I think this is it. Thank you for watching. Have a great weekend. Goodbye.